I think it really depends a lot on who you're asking in the team, but there's always two or three main things that we're always discussing in our ICs. So I would say the first one probably comes down to the team. So we obviously are looking for very resilient, strong teams that are capable of adapting and changing or pivoting the solutions that they're building whilst they're growing. But aside from that, you've probably heard of product market fit before. You probably know what it means, and if you're lucky enough, you've seen it as well. But we like to search for something that we call founder market fit. So founder market fit for us is when it just makes absolute sense for the founding team to be building in the industry that they're building in. So we've heard a lot of different perspectives. A lot of people believe that it's better for an outsider to come and build in a new industry because they bring a new perspective, because they bring a fresh set of eyes to an industry that has always worked a certain way. But we actually think that it's better for an insider to disrupt the industry that they want to build in. And the reason why we believe this is because as an insider, you know how the industry works, you know who the key stakeholders are, you know who the suppliers are, you know how the processes typically work, and you probably have some sort of key contacts that are very valuable and very hard for an outsider to get access to. So we've seen a lot of spectacular, stellar, truly stellar teams. And a lot of the times we find that in our ICs we're discussing like, okay, yes, we know these are AAA founders, they check all the marks that you're looking for, but why does it make sense for these founders to be building in the industry that they're building in? So that definitely is a big one for us. And the second one is probably the scalability or potential of growth that the company can have. There's a lot of truly great businesses that can bring excellent types of returns. But because of the way that a VC model works, we're typically investing, we're investing checks in very risky businesses where they're, probably being an early stage fund as H20 is. A lot of the times there's no product, there's no revenue. Obviously, we don't know how growth or economics or sales cycles, even CACs are going to look like. So there's a lot of risk when we're investing. So we're looking for 10x returns. And that's something that we're always trying to understand. We know that there's, a lot of interesting business models in terms of, asset light or high margin businesses such as software. There's a lot of interesting opportunities to build in fintech, etc. But we always need to make sure that the potential of growth has to be definitely outstanding because of the way that we're playing with our portfolio construction and the type of risk that we're putting into the company. I think I would separate this answer into two. So the first one would definitely be to make sure that you have a very compelling narrative when you're telling your story. So it really comes down to storytelling. It's very easy to Google or search like what are those key elements that you have to put in your pitch deck, starting with like the problem, the solution, the market size, your business model. If you have traction, like show some of that traction, and definitely who's a team, which I also think is a very important point when it comes down to pitch decks, because a lot of the times, the slide on the team is left towards the end or it's not there at all. And, you really want to know who's behind the company that you're looking at. So that would be definitely one, the making sure that you have a good narrative that, really speaks to investors, that really makes sense. It has a flow that is not too long, not too short, but, overall it really catches the attention that you're looking for. And the second piece of advice that I would give to founders is, there's a lot of mistakes around when is the right time to go out and start fundraising. So fundraising it's a full-time job, honestly. And all of the times, founders also have to be running their company as another full-time job. So, it's really important to make sure that you plan in advance, when you should be speaking to investors, because it's going to take a lot of your time. And it probably will be, another piece of advice that I would give to founders is always assume that it's going to take a little bit longer than you expect because of market timings, because you're operating a company, because you might face some challenges or bumps along the way. So always plan with a few more months in advance. and understand like what are your capital requirement needs for this round, for the next one, and plan your timings around them. So really keep that in mind and make sure that you're not going to market, a little bit when you're a little bit short in runway, and you have to be speaking with investors, back to backs, but also operating your company, and make sure that you always have, some amount of time like before or after that makes you really feel a lot more comfortable and get you through those conversations that you need in an easier pace. I think it depends a lot on the VC fund that made the investment. So just as us as funds, we have, let's call it a list, or yeah, we can call it a list of things that we're looking for in a founder or in a company. Founders should also have that same list of what they want from a VC. So you have some VCs that are more hands-on than others. You have some VC funds that need information rights, or monthly calls with the founders, or bi-monthly calls, and so on and so forth. But I'm going to speak from H20's perspective. So we really like to be a very hands-on fund in terms of adding value to founders. And we have a whole area of platform that's led by Jimena that, has different areas where H20 can be that go-to partner that helps our portfolio companies. So what you can expect from H20 is, obviously we like to have regular touch points with the companies. It's very ad hoc, I guess, in terms of like with some companies it might be more on a bi-monthly phase because the company has already raised a Series A or more rounds, and they know they don't need our help as much as our earlier stage companies that are probably like in the phases of product building or go to market, and they might need more help along the way. But we also don't like to be that type of fund that is hovering on the founders all the time, because we know you guys have to operate, and we want to let you go ahead and do that. But we also want to let you know that we are there if you have any struggle. We're a WhatsApp away. We have offices in Mexico, in Bogota, in Miami, and that really gives us a lot of coverage, and it just makes it very easy for us to be connected in terms of time zones, flights, or in person, from depending on what the founders need. Something that we like to do post investment is, so once we made an investment, we schedule a kickoff call with the founders, and what we do there is basically outline like where can we add value right away. And we say like, hey, commercial intros, top of mind, we can do these commercial intros, at product advisory, or at tech advisory, or whatever the founders need. And we do sort of like a 60-90 day roadmap, I guess we could call it that, and get started on it right away. And then there is probably the time when we are more close with the founders, and trying to see like, hey, how did it go with this intro, or how did it go with this work session, with this specific advisor. But aside from that, we once that's done, we have our regular touch points with the company, and they're asked like, hey, what do you need, like how do we help you guys. And that's pretty much what you can expect from us. I think this is a very good question, because a lot of the times we probably don't give as much visibility as we would like to founders, but there's a lot of things going on in the back after we take a first call. So typically, we start out with a first call that, any of our investment team members can take, whether it's one of the GPs, whether it's me, Felipe in Miami, or even Jime or Renzo in Colombia. We usually start with that 30-minute, let's say 1 hour call. Then, so we have two recurring pipeline meetings throughout the week, where basically, we all get together and we say like, hey, we are looking at these opportunities, we just took a first call, and this is what we think, or we want to know what the rest of you guys think. Like, does this go with our thesis? Does it go with our portfolio construction? There's a lot of like different fits that we're trying to understand with that first call, which, tying it to the importance of having a compelling narrative, I think it's very important. Like, we want to make sure that we got as much information as we need to understand, fit within our thesis as an overall. After that first call with the team, what we like to do is go ahead and schedule a second call with the founder. So something that we like to do when scheduling that second call are two things. So one is inviting more team members. So hopefully we have the rest of the team. We all have crazy agendas, so it's very hard to get, all of the team in another call. But we try to do as much as possible, and at least have one of our GPs in the call if we can. And the other thing that we like to do is before we schedule this second call, we like to send founders like a set of questions before. We're not expecting founders to prepare anything or have a new presentation or, send us the questions answered, before the call. It's just sort of to give a more structured agenda, I guess, to the second call. So like, we don't want to go ahead and do a full pitch, from scratch. Like we might ask the founder like, hey, the team, has some context, I guess, of like, what you're building, your background, etc. But, go ahead and give them a 10-minute or 5-minute pitch of what you guys are building. And, we'll take it from there and ask, the questions. And we find this helpful because it makes the second call, I guess, more useful. And this also like lets us answer a lot of questions that we, had beforehand if we weren't sure about, the market size, or we weren't sure about, the amount that the founders were raising, etc. This gives us a lot more clarity. Then we typically have an internal debrief and say like, hey, we are interested, we're not interested. Like, let's dig in a little bit more. And then after this, it's very different or very ad hoc to, I guess, the opportunity that we're looking at. But a lot of times on the background, what's happening is, we're doing research, our internal research, which can look like, can be in different forms, can be, direct, searching through through Google, through internet, through PitchBook, through articles, etc. We're also, diligencing with our advisors. So we have an advisory network that we like to leverage for these things. And, we're taking calls with them and saying like, hey, we are looking at this company, we're looking at this opportunity, what do you think? We have these questions. And then we like to go ahead as well and then and also invite the founders, to a call with one of these advisors, or if we know some sort of, company that could be a potential design partner or commercial client, we also like to go ahead and do those intros and sort of hear that perspective of the value, I guess, of the solution that you guys are building directly from this like potential client. Obviously, our investment decision does not come from, were you able to close that client in the call or not? But it gives us a perspective of like, what are the most frequently asked questions? Like, where does this make sense? Was it a no-brainer? Is it a nice to have? Is there a must-have? Once we do all that, we also have we like touch base again as a team. So we're always like constantly in communication and saying like, hey, we answered these questions, we have, these 10 more questions and so forth. And once all of that is done, that typically takes us around 2 weeks. So let's say that in the third week, we like to come together and, sort of put a final decision on like, do we like this deal enough to take it to an investment committee? Like, what is our conviction level? What are those questions that we still have that we know we cannot answer, but, we can live with? And, then we set an investment committee call with all of our investment members, and we take a vote. And that's pretty much it. So like, I guess it depends. Because we're an early stage fund, we've invested a lot of the times pre-product and pre-revenue. We've also done investments in company that have a little bit more traction. So obviously when the company is in a more advanced stage, the diligence might take a little bit more because there's more numbers to look at, more information overall. So this could probably take us between 3 to 4 weeks, depending on the stage of the company. But overall, we try to be quick and we try to give you guys visibility on like, hey, we're doing this, let's schedule this call so that you don't feel like we're, leaving you hanging and, disappearing completely. Aside from that, we're super big fans of WhatsApp. So I feel like it's one of our biggest communication tools as a team. And we also like to, be communicating with the founders through WhatsApp. So, we're either email or WhatsApp or, whatever the preferred communication method is. We, like to be literally one text away on, hey, how's it going? Do you guys have more questions? Do you need more information? And, we're typically very, very, very quick in answering those questions.